Hi, good evening, and thank you all for being here. We are delighted that so many of you are able to join us tonight. My name is Ted Parker. I'm a member of the History and Social Science Department, and I also have the good fortune of teaching economics here at PA. I live on campus here with my wife, our 3 children. I'm the proud parent of a member of the class of 23. This is my 9th year here at PA. And during my time here, I've served as a hockey coach, worked at the baseball program, and most recently served as Abbott Cluster Dean. One of the great pleasures of teaching here at Andover is the opportunity to engage with alumni. And oftentimes I'll try and bring alumni perspectives into my classroom as often as I can. So when this opportunity presented itself to speak with Megan about the election, I certainly jumped on the opportunity, and I'm really looking forward to this conversation. In thinking about how exactly to frame tonight's discussion, the term unprecedented came to mind. In thinking about the complex environmental, social, economic, and political forces that are shaping our world while living through a global pandemic that is making a second surge around the world, including over 100,000 cases reported a day in the United States. That's challenging enough. Add in a highly polarized country 9 days out from an election that has highlighted the stark differences across the country on key issues such as the pandemic response, healthcare, racial inequality, the economic recovery, the environment, and energy policy, to name a few. With the control of the Senate still undetermined, how do we make sense of all of this? Where do we go from here? Well, thankfully, we have Megan Greene, class of '97, with us tonight to share her insights and perspective and to help clarify what all of this means for the United States and the rest of the world. Megan is currently a fellow at the Harvard Kennedy School. Previously, she was the global chief economist at John Hancock Manulife Asset Management, founder and chief economist at Maverick Intelligence, head of European economics at Rubini Global Economics, and the Euro crisis expert at the Economist Intelligence Unit. Megan also writes a regular column in the Financial Times and co-anchors a podcast hosted by Freakonomics. Megan, thank you so much for being here tonight.
Thanks for having me. It's a real honor, and I have 2 siblings actually in the audience, so I've never been more nervous for a speaking position.
Excellent. We'll start with some prepared questions for Megan, and then we'll open it up for questions from the audience for the remaining 15 minutes or so. So please feel free to submit questions. I think you have a box down below that you can type in questions, and then we'll be able to respond to those as time permits towards the later part of the evening. So Megan, let's go back to 1992 when James Carville famously told Bill Clinton during his presidential campaign, "It's the economy, stupid." To what degree did that old adage apply to this election? And how would you assess our current economic state?
Yeah, so I might have a certain bias as an economist, but actually, if you look at the data, the economy was an important issue in this election. Pew Research puts out a survey before the election, before every election, asking voters what issues are important in helping them figure out who to vote for. And the most popular issue was the economy. So that was the most salient issue. Second was healthcare. Third was Supreme Court seats, and the coronavirus actually only came in 4th, which surprised me. And of course, it's hard to parse these issues out, but the economy was far and away the most salient issue. The exit polls actually after the election also revealed that the economy was an issue. So those who felt like the economy was going well or was, doing well enough, they voted for Trump. Those who felt that the economy was bad or was really bad, they tended to vote for Biden. So the economy was a pretty divisive issue. And also we discovered that choosing between whether to rebuild the economy or manage the virus was a really divisive issue that was important in these results. And so those who wanted to manage the virus overwhelmingly voted for Biden. Those who wanted to reflate the economy overwhelmingly voted for Trump. So the economy was certainly a relevant issue here. And so you ask, how is the economy at the moment? And I would kind of classify our economic experience through this virus crisis as a tragedy in 3 acts. So the first act was when the virus first surged and we locked down the economy and sort of fell down a hole. We had the swiftest decline in economic activity we've ever had. The second act was that the incredibly fast rebound off the bottom, which made it look like this might be a V-shaped recovery. So we had growth that annualized at least was 33% in the third quarter of this year. That's unheard of for a developed economy, but it's because we were bouncing off such a low. We've just entered the third act of this tragedy, and I like to call that the long, hard slog. And if you look at the less traditional economic indicators, so high frequency alternative data like Google's mobility data or OpenTable restaurant bookings, or a colleague of mine at Harvard, Raj Chetty, has put up all this credit card and debit card spending data online for free, which is a huge service. So you could see what's happening in different states and even different communities. Our recovery has gone sideways. It's a lot harder to hire the last 20% of workers who lost their jobs than it was to rehire the first 20%. So we're in that third part, the long, hard slog. It's worth pointing out that we had a huge fiscal stimulus package at the beginning of this crisis, and most of it expired at the end of July. So most of the support for small businesses and individuals has been long gone. And so everyone kind of socked that fiscal stimulus away and has been burning down their savings, and that's completely unsustainable. So we're in the toughest part, I think, from an economic perspective and maybe from a virus perspective as we stare into winter.
So Megan, given the historical turnout at last week's election, the continued political polarization within the United States, and the distinct possibility of a divided government, what are some of the main takeaways that we can glean from this election?
Yeah, so I think there are probably 4 main points that I would take away from this election, and not all of them are to do with economics, but I think they're important anyhow. The first one is that the Democrats in particular have had this assumption that there is just a secular decline in support for Republicans. And the argument is that it's white men who like Republicans, and white men are, just because of demographics, in decline. So over time, Republicans should lose supporters and Democrats should pick them up. And we've found decisively in this election that that's just not true at all. So Trump's support rose from 2016 among every single demographic except for white men. And I haven't heard good explanations for all of that. I think it's a mystery in some cases, but it does show that this assumption that the Republicans are just in this long secular decline, there's nothing they can do about it, that's just fundamentally not true. And that's a new concept I think we need to come to terms with. Secondly, I would say, we fired the CEO. And because of the different aspects of this election that were particular to the coronavirus, so the mail-in voting, the absentee ballots, the counting was different. So it looked actually closer than the presidential race probably was in the end. We're still getting votes counted, and we'll get recounts in some states. But it was a more decisive victory. It certainly didn't look like that, at midnight on November 3rd, I can say, having watched. I'm sure you all did too. But I think in the end, we did clearly fire the CEO. But what we also saw was that the Republicans actually gained more seats in the House than they had previously. So the majority has dwindled for the Democrats in the House, and the Senate is still up in the air. So it will all come down to 2 runoff races in Georgia, and the Democrats would have to win both of them to gain control of the House, or to retain control of the Senate. So I think the lesson there is that we fired the CEO, but we've kind of stuck in potentially Mitch McConnell to make sure that the new safer pair of hands can't really do much. And the lesson there, I think, is that the US just isn't ready for radical change. We saw it in terms of Biden being chosen as the Democratic candidate over more extreme candidates like Elizabeth Warren or Bernie Sanders. And I think the final result shows that while Trump, I think, did lose decisively, America's just not ready for any kind of wholesale change, even in the middle of a pandemic. A third lesson, I think, is about pollsters. We shouldn't put too much faith in the numbers that they're turning out. Actually, the numbers for the presidential race weren't that far off, but the numbers for the Senate race actually are pretty far off. And there was a lot of soul searching after 2016, both with the US elections, but also the Brexit vote, where pollsters did a bunch of soul searching. They implemented a ton of methodological changes. They reweighted demographics, and ultimately they haven't gotten it right yet. So I think that's a lesson that we already kind of knew, but now it's, we can't ignore it. And then fourth, I would say Trumpism is here to stay, even if there was some repudiation of Trump. I think that Trump's kind of populist brand, his America First platform, is certainly here to stay. Part of the America First platform has been picked up to some degree by the Democrats as well. So the Democrats have had to move in order to compete in this election. But I also think for the Republicans, even if we don't get Trump running again, and we might, I think some form of reformed Trumpism will be what we'll be faced with in the next election.
Thank you. So thinking about priorities, President-elect Biden and Vice President-elect Harris have made it clear their initial efforts will focus on containing the virus. Thinking about both short and long-term goals, what priorities should the Biden-Harris administration focus on?
So I think containing the virus is first and foremost absolutely what they have to do. The shape of the recovery will be determined both by the virus and by policy. So they need to focus on both. But economists are often asked, should we go ahead and focus on the virus or should we focus on the economy? And it's just a false question, because there is no economic recovery as long as there's uncertainty surrounding the virus. So I would agree with that priority. Beyond that, it will come down a bit to what happens in the Senate. President-elect Biden and Kamala Harris will have more leeway to be able to pass things if the Democrats retain the Senate. But even if they don't, there's some things that they can do. So first, I think we need to fill in the hole that we fell down when we locked down the economy in March, April. And so most people are calling that fiscal stimulus, and technically that's true, but I think we should probably look at it as catastrophe mitigation. And as I mentioned, our fiscal stimulus measures largely expired in late July. And so people and businesses are going to run out of savings soon, particularly if we lock down again, which if you look at Europe's experience seems likely, or at the very least possible. So passing a stimulus is important, and the Democrats will have to reach across the aisle potentially to get that passed. I don't think it will be the $2 trillion stimulus that the Democrats had previously passed in the House in October. I think it'll be closer to $1 trillion. But at that point, I think that's better than nothing, and that's needed urgently. I feel like the US economy is kind of running on fumes now, and that just can't last that long. Beyond that, though, Biden's initial spending plan was to spend $7 trillion over 10 years. It's a huge envelope, huge. He won't be able to do that now. His top priority in terms of spending was healthcare. I don't think there's any chance of any real meaningful reform on healthcare, given the slim majority in the House and potentially not having the Senate. So the second biggest spending item was infrastructure, and also climate change. And so I think here there's a real opportunity. The Republicans and the Democrats have agreed that we need infrastructure spending forever. It's just trying to figure out how to pay for that has been the challenge. And so I think we might have more agreement this time around. And infrastructure spending, particularly green infrastructure spending, is a great way to provide an immediate stimulus, but also to retool the economy for sustainability. And because infrastructure programs are incredibly worker intensive, it creates a ton of jobs, and they tend to be high wage, high hour jobs. So they tend to be the kind of jobs that we need to create in order to upgrade our workforce. So I think that should be kind of a first medium to long-term project that the administration pushes through. There will certainly be some movement on tax policy. So I don't think we'll get the kind of tax hikes that Biden had campaigned on if the Republicans win as one of the Georgia runoffs. But I do think there will be some efforts to close loopholes for companies that are offshoring things like intellectual property. And I think that could be meaningful as well. So we'll get that. And then, the immediate priority will be domestic, given the crisis that we've faced. But I do think that the US will have to look outwards as well. And there, I think China and trade policy will be a focus of the administration. And I actually don't think it will change as much as many people are hoping. And international audiences are always really confused when I say that, and a bit disappointed, I have to say. But ultimately, Trump's Make America Great Again strategy isn't that different in terms of goals from Biden's Buy American strategy. They're both some form of some kind of protectionism with industrial policy built in to bring companies back to the US, to subsidize companies that create jobs in the US. We have bipartisan support for industrial policy for the first time in decades. So I think that's here to stay. And I think, the goals will be the same with China. So to protect industries like technology that, are really important for national security. The means by which Biden will achieve that, I think, are very different, however. So Biden's more in favor of multilateralism. He's going to reach out to our allies, who President Trump has been alienating for the most part when it comes to trade for the past 4 years. So we can expect more coalitions, fewer tariffs, but don't expect the tariffs to be rolled back unless the US can extract concessions in exchange for it.
So just a quick follow-up there. Just thinking about the importance of the runoff elections in Georgia. How much of Biden's ability to get things done is going to be dependent upon control of the Senate?
So I think there are a number of areas where the Democrats would need to control the Senate to have any chance of getting it through. And even then, some of the Democrats in the Senate have shown that they're quite happy to rebel. So even then, it's not a slam dunk. It's quite tricky. And Biden has, reached across the aisle on a number of occasions and would need to do so here as well. I mentioned that healthcare, there's no chance, I don't think, of a meaningful expansion in the Affordable Care Act if the Republicans control the Senate. Tax policy, there's no chance that, generally Biden, or President-elect Biden, had campaigned saying that he'd like to maintain tax cuts for the middle class, but increase taxes pretty sharply for the wealthiest and also for corporations. I don't think that's possible if the Republicans control the Senate as well. So those kind of two big line items that were in the campaign, I don't think they're possible unless the Democrats win the Senate, and even then it might be difficult.
So looking ahead for both parties, given the fact that Democrats have won the popular vote in 6 of the last 7 presidential elections, along with changing demographics around the country, how will this election impact both parties going forward?
So that's a great question. I think on the Republican side, I mentioned that I think Trumpism is here to stay, but we're not sure exactly what direction that could go in. So I did say, it might just go in Trump's direction. So I think there's a meaningful chance that he could try to run again in 4 years. It's one option. 4 years is a long time, so we'll see. But there are other alternatives. So there are kind of traditional Trumpists like Nikki Haley, Ted Cruz. They're one group who might take over leadership of the party in Trump's absence. There are a bunch of young reformers who have been watching Trump's brand of populism and are looking and have been studying it and looking to kind of improve on it. And I would include in that group Josh Hawley, Tom Cotton, Marco Rubio. And in my view, that's the most likely scenario. They could end up running the Republican Party, and they're, in my view, a lot cleverer than Trump, actually. So could move the Republican Party in a different direction quite effectively. And then the final group is kind of the heirs. So you could get Donald Trump Jr. or Javanka, one of them. That's always a possibility as well. But I think the young reformers are probably the future for the Republican Party at the moment, because Trumpism there wasn't a wholesale rejection of Trumpism across the board. 70 million people still voted for him. And the Republicans did quite well in the House and in the Senate. So I think for the Republican Party, that's the direction. For the Democrats, it's difficult. President-elect Biden is left with a pretty broad-reaching tent. So he has to span both the moderates and also the much more progressive Democrats. Already, if you look at the transition teams, there's a lot of talk about how there are a lot of progressives on the transition teams. And so there's a lot of anxiety out there about, does that mean that it's going to be a really progressive government? I would say no, the transition teams actually don't dictate who will actually be in the government. So that's not something to worry about. But just the fact that people are asking a question, I think, suggests that people are nervous about the future of the Democratic Party. I mentioned that I thought one of the lessons is that, we put in a safer pair of hands, but the country doesn't really want him to do anything radically different. And so I think that means that the Democratic Party will have to move towards the center, or stay towards the center, since they've already shifted there a bit.
So switching a little bit to, thinking about the election and the impact on equity markets. Equity markets have surged a little bit since the election and nearing all-time highs, including a spike after the successful clinical trials announced by Pfizer earlier this week. And at the same time, the economic recovery seems to be petering out. So how do we reconcile this continued growth in the equity markets with such sort of maybe a little bit more somber outlook for the economy going forward?
Yeah, so I get this question a lot because it confuses a lot of economists, I think. Usually, if the economy is booming, then equity markets should do well. But the recovery is petering out. So we're in the long, hard slog period. So why are the equity markets off to the races? And I think the answer is in the details. So if you disaggregate the biggest US equity index, the S&P 500, you'll notice that, about 20% of the market is the FANGs plus Microsoft. And another roughly 20%, 15% is healthcare companies. And so it kind of intuitively makes sense as we sit here now on a Zoom webinar that technology companies and also healthcare pharmaceutical companies would do well. So, I don't think it's crazy that the markets are off to the races. I just think they're heavily weighted towards two industries, basically, and within technology, really just a handful of companies. And so they've kind of buoyed the entire market to some degree. Also, the Federal Reserve, the central bank, cut rates immediately. They acted aggressively and swiftly. It's hard to overstate how much ground they covered in a short period of time. I remember last October asking at the Boston Fed, I asked someone senior at the Boston Fed, would you guys ever consider buying corporate debt? And he looked at me like I had 40 heads. I mean, it was absolutely not on the table. And sure enough, the Fed immediately started buying up corporate debt. And the day after they announced they were buying up corporate debt, the equity market bull run really started. That's not coincidental. So the notion that the Fed has investors' backs, I think, has been reinforced in this crisis. Also, with rates so low, borrowing costs are incredibly low. And so fixed income investors aren't doing too well. It's hard to find, in fact, in real terms, including inflation, borrowing costs for most governments, developed country governments in particular, are negative. So basically, people are paying governments to take their money. Now that's not normal, but it means investors aren't making a whole lot off that. And so if you want to make any kind of return, then a better option is to pile your money into equities. So that makes sense too. The S&P dividend the average S&P dividend is much higher than the US 10-year government bond yield. So on average, profits tend to be higher in equities too. So I actually don't think the booming equity market is a reflection of what investors think will happen with the economy, although the promising news about a Pfizer vaccine certainly helped, and that might be some optimism about what the economy could look like when we're on the other side of this. But generally, I think it's a reflection of these other factors I've mentioned.
All right, so I have one last question, and then we have some questions that have come in. So I like to end things on a positive note, if possible here. So what's the upside scenario for the US economy going into 2021?
So I think, as I mentioned before, the virus will dictate the pace and shape of this recovery. And so if we could get a number of vaccines and have them widely distributed, then next year, the optimistic scenario is that if we're all vaccinated and we don't feel like going out will land us in the hospital, demand will bounce back pretty significantly. And there will be a bunch of pent up demand as well. So you could argue that people haven't spent money because restaurants have been closed. You couldn't go out if you wanted to. So it's sort of a supply problem. There just aren't any shopportunities. And I'm proud I got the word shopportunities in an economics conversation. But I think that that's one perspective. Another perspective is that maybe we're all kind of scarred by this, and so it might take longer. But the optimistic scenario is that we get a vaccine, we open up our economy, people go out and spend. Also, interestingly, new business formation has absolutely skyrocketed through this crisis, which seems a bit counterintuitive, but borrowing costs are so incredibly low. And I think, for people who have been laid off, now is the time to try launching that business they always wanted to. So you could argue there's some kind of traditional creative destruction happening here, where sort of old industries that were already on their way out are now going to be out, and new industries and new businesses are forming that will be successful in the future. So you could also argue that there's some creative destruction. And then finally, there's a point that's not particularly economics based, but is relevant to Andover, in that hopefully there will be a sense that as we watch the most vulnerable hourly service workers get knocked off their feet first in this crisis, we've recognized that inequality is a huge issue in our country, more so than any other country. And hopefully we've come to realize how important communities are, and will take Andover's motto of non sibi to heart, and that maybe this could be an optimistic scenario coming out of this that will hang on to that aspect of it.
Thank you. So we do have some questions that have come in. So I'm just going to read you the first one that came in, and it ties into what you were just speaking about. It says, what do you think Biden can do to address income inequality? And do you think the impact might have any influence on future partisanship?
Yeah, so I feel like I've planted this question myself, but I didn't. I'm writing a book on income inequality at the moment, and it is more turbocharged in the US than anywhere else. So I think there are a few things Biden can do, and a lot of these things are actually in his platform. One I mentioned was, maintaining middle class tax cuts from 2017, but hiking taxes significantly for the wealthy, boosting capital gains taxes, dividends taxes, estate taxes. That's a form of redistribution that Biden had proposed. I think it will be impossible if he can't actually have the Democrats gain the Senate. And even if they do, I think it will be difficult. So I wouldn't put all my eggs in that basket. Another possibility is labor market reform, which Biden has put forward. And there, Biden has been mostly focused on worker power, and mainly, the ability of workers to negotiate for higher wages. And he's noticed, rightly, that unionization has fallen pretty significantly in the US, particularly relative to other developed countries like Europe. And if you're not part of a union, it's much harder for you to advocate for higher wages. And so one thing he hopes to do is to encourage unionization, and also to punish companies that are discouraging unionization. Another trick that companies use to kind of disempower workers is to misclassify them as contractors rather than hiring them as actual employees so that they don't get any benefits. They're on short-term contracts that constantly have to be rolled over, so they don't have any real security. It makes it much harder for them to negotiate for higher wages. And so he's hoping to punish companies that do that. And I think this is a widespread problem, so that would be a welcome development. Another driver of income inequality is market concentration. So in a few industries, particularly technology, healthcare, and retail, you basically have these superstar firms that have risen to the top, and they end up buying up all the smaller companies that might one day become competition for them. So the Googles, Apples, Amazons of the world. And so if you're a worker in one of those industries and you want to change jobs, you don't have that many other choices because there's only a handful of superstar companies really. And so it's much harder to go to a new employer and say, okay, well, I'll work for you if you pay me more. Workers don't have that kind of power. The power lies with the companies generally. And so that really undermines incomes and wages. And so how can you address that? You can beef up antitrust, I think mainly. And so that's something else that Biden can focus on as a way to address income inequality. The impact that might have on future partisanship. I mean, I think generally measures to redistribute wealth wealth, they tend to be left-wing ideas. They don't tend to be things that the Republican Party takes on. So if Biden were to go ahead and engage in massive distribution, I think that would polarize politics even more, but I don't think that's really on the cards here.
All right, thank you. Let's see. Do you think there's any limit to how many trillions can be spent on bailouts without leading to inflation?
So yeah, I will die on this hill. I think we could spend a lot of money without generating significant amounts of inflation. And I actually think we have Trump to thank for this realization. I mean, a lot of us sort of suspected it. But in 2017, Trump, the US economy was growing above potential growth. So the economy was running hot. And we basically poured kind of gasoline on that and lit a match. And everyone was worried we'd get a huge fire, and we didn't. So Trump cut taxes significantly, and he also passed a massive spending bill. And sure enough, that according to the textbooks should generate significant amounts of inflation, and it didn't. The Fed, still can't get to its 2% inflation target. And so I think we've discovered that there are a bunch of kind of secular trends in economics that undermine your ability to generate inflation. So, the fact that we buy services more than goods now, and services jobs are low-hour, low-wage jobs, so we don't get wage inflation. Consequently, we don't get price inflation. That's one factor. The gig economy also keeps upward pressure off of wages and inflation. The fact that we invest in intangible capital, so things like brands and intellectual property rather than tangible capital, so things like bricks and mortar factories, that undermines inflation. So there are all these new trends that are not only here to stay, I think they've just been accelerated by the coronavirus crisis, that I think mean it's actually pretty difficult to generate meaningful amounts of inflation. So we can spend a lot of money, I think, without generating inflation. Of course, the fear is that will generate inflation. The Federal Reserve will freak out and feel like they have to hike rates to get on top of inflation, remembering the 1970s. And when they hike rates, all of these companies in particular who have borrowed tons and tons won't be able to pay it all back, and we'll get widespread defaults. That's a concern. I don't think we really need to worry about it because I just don't see a meaningful acceleration in inflation. And don't forget, first of all, we're in the middle of a war basically right now. So you don't think about how you're going to pay for the war. You just need to win it. And I think that's the stage that we're still in. And also, governments are paid to borrow. I mean, it couldn't be any cheaper. The US government gets paid to borrow and spend, filling in this hole. So I thought it was a no-brainer before the virus actually hit. Now I think it's even more so.
All right, moving on to a little bit more cabinet-specific question. Will Bernie Sanders win his campaign to be Biden's Secretary of Labor? So what effect would he have?
So I think that probably not. I think that, as I said, what we've seen is that in aggregate, the US doesn't actually want significant change. But there's an additional challenge in terms of the cabinet because they have to be confirmed by the Senate. And so there's no chance, if the Senate is run by Republicans, that someone like Bernie Sanders or Elizabeth Warren or AOC or anyone from the more progressive part of the party can be put in a Senate confirmed position, because they just won't be confirmed. Even if the Democrats win the Senate, I think it would be difficult to have a progressive member be part of the cabinet. So I think that's unlikely. I mean, if he were put in that position, I think we would see a lot more about things like worker power. And I also think we'd see things, and actually Biden has suggested doubling the minimum wage, but I think Bernie Sanders would certainly support that and would be even more aggressive about it. So I do think we would see an increased focus on income and wealth inequality, but I think it's really unlikely that Bernie Sanders will get a cabinet position.
Let's see. So how important is it how important is other countries' handling of the virus to our own economic recovery? How about immigration, and how will Biden affect this? Question.
Yeah, so on the first part, how important is it that other countries manage to get on top of the virus? I would say that as long as we don't have a vaccine or a treatment, if the virus is in retreat in one place, you can't rely on that if it's surging in another. So it's a bit like whack-a-mole. And so we need to worry about it consequently, because we won't manage to suppress it while it's surging in other countries, particularly if we're able to be mobile. So if we can get on a plane, then we can certainly spread it. I also think, in 2008, 2009, China bailed us all out of that crisis pretty much. I mean, they reflated their economy to about 10% growth. That's not going to happen this time around. So there is a question about where global demand is going to come from. China is the only G20 country that's expected to grow this year. So they've had more success in managing the virus and also in reflating their economy. But they'll grow by, maybe 6%, which is a lot by US standards, but it's not the 10% they grew by in 2008, 2009. So if they're not going to bail us out of this crisis, who is? I don't think we can rely on Europe, given that they're all in lockdown right now, among other things, to provide demand. Emerging markets, I think they've been hit sort of at a different pace than developed markets in particular. So they had the financial hit first, and the virus hit them later. And so, I think as long as they're grappling with healthcare systems that are more constrained and less fiscal room to provide stimulus, that they're not going to provide the demand. So I think it's going to come down to the US, and this is why I think stimulus in the US is so important. How will Biden affect immigration? I mean, I think we can see immediate action on the Dreamers, on DACA. I think, separating families will become immediately illegal, not allowed. So I think there will be that significant difference. I think, funding for a wall will probably disappear pretty quickly too. So I think there will be a fundamentally different approach to immigration under Biden than there was under Trump.
Right. Another question, would a federal job guarantee be a good way of boosting the economy? And second part, what do you think of modern monetary theory?
So on a federal job guarantee, I mean, another way of saying that is a universal basic income. So everybody gets paid no matter what they do. I think, we've seen that experiment in the Soviet Union before, and it didn't work out that well. But I also think there are concerns that in this age of automation that, we won't have enough jobs for people. And there have been concerns with every wave of innovation throughout history, and we have ended up having enough jobs for people. So depending on where you stand on that debate, I think we'll have different kinds of jobs, and that we'll need to retool the labor force, and we should focus on that probably. But if there aren't enough jobs for people, should we go ahead and just provide a universal basic income anyhow? I think there are real social problems that probably come with paying people to, sit at home and play video games. And I will say, there's research that came out alongside this discovery that we have an opioid crisis in the US. And white men in their 40s were asked decades ago, are you happy you just staying at home, not working? And they far and away said no. And they were asked, what do you do? And they'd say, well, I watch TV. And they repeated the series of interviews more recently, and they asked white males in their 40s, are you happy staying at home? And they kind of said, well, yeah, we're all right. And they were asked, what do you do? And they said, we play video games. So the entertainment has improved quite a lot. And I do think there are social issues that come with paying people if they're not working. What do I think about modern monetary theory? I think they get a lot right, actually, but I'm not a modern monetary theorist. So modern monetary theory basically says that, a government doesn't actually have to raise the money that it spends. We have a printing press. So we can go ahead and just spend as much money as we need. That's not a constraint. The constraint is if we spend all this money, according to economics textbooks, that should generate inflation. And inflation is a problem. So inflation becomes the constraint instead of your deficit or your debt burden. What I think they get right is that we don't actually have to raise taxes before we can go out and spend money. That's right. We don't. We can just run up deficits, borrow. We can also print money. What they get wrong is that the constraint is inflation, I think, because according to modern monetary theory, if you get inflation, then it's not the central bank who should deal with it. It's actually the government, and they should deal with it by hiking and cutting taxes. And I think that's a problem because tax policy is inherently a political decision. And so it's hard to see a bunch of politicians saying oh, inflation's, accelerated a bit. What should we do about taxes? Let's make that decision really quickly. I just don't see how that works. So I think, they get a lot right, but when it comes to actually implementing it, I think it's a bit problematic.
Sorry, my lights went out in my room. One other question here. And just on the modern monetary theory, that's provided the dollars are denominated in your own currency, right? That's your debt. Yeah.
Yeah, and it helps to have the global reserve currency, which really only applies to us. But even in the US, I think it's problematic because you can't expect politicians to agree on something just because inflation rose or dropped a bit.
I'm going to try and synthesize this question. China is a rapidly growing economic power, which has often been politically hostile to the US and allies. How can America maintain its position as the #1 economy?
That's a great question. So you could just say maybe they can't. I mean, China is big and growing much faster than us, and has a big population. Now, a lot will come down to kind of immigration policy ultimately, because the US was a land of immigration, might become more so going into the future. And for whatever you think about that politically or socially as an economist, that's a slam dunk win for your economy to add the number of people working. That will boost growth. China actually is seeing a less favorable demographic now. So they are facing an aging population. So some of that will even out a little bit naturally over time. Otherwise, I mean, I do think that industrial policy will play a role here. I think we're going to end up getting protectionism under Biden. It will just come with more cuddly words to describe it. So even things like unionization, there's a whiff of protectionism in that. We just don't call it protectionism because that sounds harsh. So as I said earlier, I think the Make America Great Again strategy and the Buy American strategies have pretty similar goals. And that's to, encourage us to buy American products, to encourage US companies to be based in the US, to hire US workers. We'll go ahead and subsidize some of them. That's one way to try to boost the US economy. I mean, fundamentally, we need to boost potential growth, though. You can either do that by boosting your labor force, as I said. Immigration's the most powerful way of doing that. Another way of doing that is to try to get more women into the labor force. And here, I think the coronavirus has actually been a disaster for the US because we haven't provided, I think we gave more money to Delta Airlines than we did to childcare broadly across the country. So a lot of women are now dropping out of the workforce in order to take care of their kids and school them, or to take care of parents. As economists, we often kind of chide Japan for its incredibly low female labor force participation rate. And actually ours in the US is way lower, just nobody really realizes it. So that's another way to boost potential growth, is to get women into the workforce. So policies to achieve that could help. And then otherwise, innovation and investment is really important in boosting your potential growth. So some of that, again, will come through industrial policy, investing in companies at home. But otherwise, improving the business environment, encouraging companies to beef up their R&D arms, things like that will boost potential growth as well.
Yeah, this last question, it's kind of touches on a little bit of that. I read recently that the conversion to automation is accelerating due to the coronavirus. Do you think that is going to lead to long-term changes in the workforce?
Yeah, so the coronavirus has accelerated a whole bunch of things, and this is definitely one of them. So I think particularly as we work from home and companies have had to do with fewer resources, companies that were thinking, yeah, we should probably automate that, but we've got all these employees, they're now thinking like, now's our time, we should figure out how to automate that. And so I do think it is accelerating. And, automated jobs tend to be middle class, kind of middle skilled jobs. So it's sort of hollowing out the middle layer of jobs. And so that is a problem, I think. That is a fundamental structural shift in our economy that I think will be with us to stay. And so what do you do about that? One thing is to retool the workforce. And I mentioned before, I think this is going to have to be a priority. And it's difficult. I think right now I counted recently, there were 29 different agencies that you could go to for skills training. I mean, that's incredibly complicated and difficult to navigate. And if you want to go for skills training, then you need to do it full time. Very few people can actually afford to, leave their jobs and retool. So I think beefing up our subsidies for workers who want retooling, streamlining that entire process will be incredibly important. The problem with this, of course, is that education and reskilling, it's kind of a slow burner. You don't get immediate payoff from that. And the election cycle is 2 or 4 years. And so very few politicians are willing to go in and really tackle that because they won't get a payoff at the polls off the back of it. So I feel like I leave many economics conferences where we all say, yes, we need to invest in education, and nobody ever does it because of the political realities. But I do think it would actually help here because we are hollowing out a specific segment of the workforce that we could figure out how to retool. And also, it was those hourly services workers who are in low wage, low hour jobs who got fired immediately in this crisis. So our workforce has never been so vulnerable to the kind of shock that we've had. And if that wasn't a wake up call that we need to upgrade our labor force, then I don't know what is.
All right, sticking with the education theme, what do you tell places like Andover to emphasize in education so as to help the U.S. maintain such status in the world?
So I think there are all kinds of, obviously, economics. Ted, I'm boosting your enrollment and talking my own book. But, economics is only one lens through which you can view the world. And there are many others, history, politics. I think probably having a global focus is really helpful. So I've found as an economist in the US, particularly in financial services, that many of my clients kind of thought they could get away with only caring about the US, but actually, we have to accept the US fits in a global context and is often impacted by what's going on elsewhere. So maintaining that kind of global perspective is really important as well. And that goes for in the classroom, but also outside of it. Having any kind of diversity of thought is always a bonus in education. And I think Andover does a great job with that.
We have a question here about your podcast.
Oh.
You want to give it a plug?
Sure. So it's actually brand new. I think the pilot's coming out next week.
Okay.
Yeah. So if you're looking it up right now, you're not finding it. But if you look it up in a week, you should. And our first pilot is on the Fed and what they think they're supposed to do and what we think they're supposed to do. And they're not the same. But it's in plain English. You don't need to be an economist to understand it.
Excellent. Let's see. I think we have time for maybe one more question, and we'll wrap things up. Let's see. Maybe the last question here: if unemployment numbers stay high, is it still fair to say the economy is doing well, especially when almost half Americans don't participate in the stock market?
Yeah, so I think you're right to point out that the labor market has improved quite a lot, but actually it's still very much healing and a lot of people are unemployed. And importantly, initially, most of those people who said that they were unemployed said that they were temporarily unemployed. I think 80% in the initial months of this crisis. And now that's come down to about 30%. And at the same time, the number of people who report that they're permanently unemployed has risen significantly. So it's going to be much harder to get permanent unemployed people back into work than those who were temporarily unemployed and could maybe be hired back by their previous employer once they got back off the ground. Also, what we're finally starting to see is the number of long-term unemployed people has started to really skyrocket. It's set to triple over the next 2 months. So that's a dramatic increase. And it's important because a lot of research shows both that it takes a lot longer for people who have been out of the labor market for more than 27 weeks to find jobs, but also that when they do, their wages tend to be lower, which exacerbates the inequality issue. And then you're right, most Americans don't hold equities. So Joe Sixpack isn't really benefiting from this market rally. And that's an issue that we've seen over the past couple decades, that the share of growth going to capital has gotten much bigger than the share of growth going to labor, so going to workers. And what we found throughout history is that's kind of been a pendulum over time. This where the share of growth is going, it swings between capital and labor. And when it swings too far in one direction, something always drives it back. And it's either, legislation, because policymakers quite intentionally address this, or it's revolution. So, the Russian Revolution, the French Revolution, there are many examples of this, and that's how the pendulum gets pushed back. And I know which one I would prefer. Definitely legislation. And so I think, hopefully between the two candidates, I think Biden has had a much bigger focus on addressing inequality, which, in terms of redistribution makes a lot of people nervous. But in terms of kind of boosting worker power so that over time workers can increase their own incomes, and that can kind of slowly address income and wealth inequality, I think that's really important. And if anything is good about this crisis, it's that it's shown us that inequality is a huge issue. And so hopefully politicians will address that.
Well, thank you, Megan. We are approaching 8 o'clock, and I don't think we got to all the questions, but But Megan, before we go, I just wanted to offer, is there anything else that you wanted to share before we sort of wrap things up here tonight? A question that you wish was asked?
Oh gosh, I think we covered most of the points, but I guess I would say that the long hard slog part sounds quite grim. And I think it will be a long hard slog, but if we can manage expectations about the virus appropriately so that we're appropriately afraid of it, and not cavalier, and we can manage expectations about a vaccine, which does seem pretty promising, then I do think that there is light at the end of the tunnel. And that when we can go out finally and act a bit more like normal, when the dust has settled, some things will fundamentally look different in the economy. But I think there will be some sort of new industries and new companies, and rejuvenation of that sort. So there is light at the end of the tunnel. I guess I'd leave you with that.
Well, thank you, Megan. Thank you so much for your time and your insight. It's been awesome to have this conversation with you. And thank you for all the folks that submitted questions. This has been really fun and insightful for me, and I've really enjoyed it. I thank you all for being here tonight. And Megan, again, thank you for your time.
Thanks for having me.